I'm excited to share with you 5 simple investment strategies that can help you grow your money over time, and I'm going to use a specific example to make it more relatable. Let's say you have $1,000 that you're willing to invest, and you want to know how to turn it into $10,000 in just 5 years. That's a pretty ambitious goal, but it's definitely achievable with the right strategy. First, it's essential to understand that investing always involves some level of risk. There's no such thing as a completely risk-free investment, but some strategies are more conservative than others. Before we dive into the specifics, I want to emphasize the importance of doing your own research, setting clear financial goals, and being patient. Investing is a long-term game, and it's crucial to have a well-thought-out plan. Now, let's get started with our first strategy, which is investing in a high-yield savings account. This might not be the most exciting option, but it's a great place to begin, especially if you're new to investing. High-yield savings accounts are essentially savings accounts that earn a higher interest rate than a traditional savings account. They're usually offered by online banks, and they're very liquid, meaning you can access your money when you need it. The interest rates may not be spectacular, but they're generally higher than what you get from a traditional bank. If you invest your $1,000 in a high-yield savings account with a 2% annual interest rate, you can expect to earn around $20 in interest per year. It's not a lot, but it's a start, and it's a very low-risk investment. Our second strategy is investing in index funds. Index funds are a type of mutual fund that tracks a specific stock market index, such as the S&P 500. They're a great way to diversify your portfolio, and they tend to be less expensive than other types of investments. When you invest in an index fund, you're essentially buying a small piece of the entire stock market. This can be a great way to spread out your risk and potentially earn higher returns over the long term. Historically, the S&P 500 has returned around 10% per year. So if you invest your $1,000 in an index fund that tracks the S&P 500, you could potentially earn around $100 in returns per year. That's a much higher return than what you get from a high-yield savings account, but it does come with more risk. Our third strategy is investing in dividend-paying stocks. Dividend-paying stocks are stocks that distribute a portion of the company's profits to shareholders in the form of dividends. These can be a great way to earn regular income from your investments, and they tend to be less volatile than other types of stocks. When you invest in dividend-paying stocks, you're essentially buying a small piece of a company that generates regular income. This can be a great way to build wealth over time, especially if you reinvest your dividends. Some dividend-paying stocks have historically returned around 8% per year. So if you invest your $1,000 in a dividend-paying stock, you could potentially earn around $80 in returns per year. Our fourth strategy is investing in real estate investment trusts, or REITs. REITs are companies that own or finance real estate properties, and they offer a way for individuals to invest in real estate without directly owning physical properties. REITs can be a great way to diversify your portfolio and potentially earn higher returns over the long term. They tend to be less correlated with the stock market, so they can provide a hedge against market volatility. Some REITs have historically returned around 10% per year. So if you invest your $1,000 in a REIT, you could potentially earn around $100 in returns per year. Our fifth and final strategy is investing in a robo-advisor. Robo-advisors are online platforms that offer automated investment management services. They use algorithms to create a diversified portfolio based on your risk tolerance and investment goals. Robo-advisors are a great option for beginners, as they're often very user-friendly and require minimal effort. They also tend to be less expensive than traditional financial advisors. Some robo-advisors have historically returned around 12% per year. So if you invest your $1,000 in a robo-advisor, you could potentially earn around $120 in returns per year. That's a pretty impressive return, but it does come with more risk. Now let's talk about how to turn your $1,000 into $10,000 in just 5 years. To achieve this goal, you'll need to earn an average annual return of around 58%. That's a pretty high return, and it's not going to be easy to achieve. However, if you're willing to take on more risk and invest in a diversified portfolio, it's possible to earn higher returns over the long term. One way to achieve this goal is to invest in a combination of the strategies I mentioned earlier. For example, you could invest $500 in a high-yield savings account, $200 in an index fund, $150 in dividend-paying stocks, $50 in a REIT, and $100 in a robo-advisor. This would give you a diversified portfolio with a mix of low-risk and higher-risk investments. Another way to achieve this goal is to take advantage of compound interest. Compound interest is the concept of earning interest on both your principal investment and any accrued interest over time. It's a powerful force that can help your investments grow exponentially over the long term. To take advantage of compound interest, you'll need to invest your money for an extended period and allow it to grow over time. You can also reinvest your returns to maximize your gains. In addition to these strategies, it's essential to have a solid understanding of your personal finances and investment goals. You should have a clear idea of your risk tolerance, time horizon, and investment objectives. You should also have a well-diversified portfolio that's aligned with your goals and risk tolerance. It's also crucial to avoid common investment mistakes, such as buying high and selling low, or putting all your eggs in one basket. In conclusion, turning $1,000 into $10,000 in just 5 years is a challenging goal, but it's achievable with the right strategy and a bit of luck. By investing in a combination of high-yield savings accounts, index funds, dividend-paying stocks, REITs, and robo-advisors, you can create a diversified portfolio that's tailored to your risk tolerance and investment goals. Remember to always do your own research, set clear financial goals, and be patient. Investing is a long-term game, and it's crucial to have a well-thought-out plan. With the right mindset and strategy, you can achieve your financial goals and build wealth over time.